यूनिकॉर्न के उसके बाद बैट का स्किन थी।
Okay, we will just be waiting for a couple of minutes for everybody to come back. Anybody who has doubts, now is the time. We are going to give 2 minutes to people to come. Time frame, if you are doing intraday, 30 days, 15 to 30 days, you can take either. Okay, and if you're doing delivery, I would suggest you can go 50 days. 50 days is safer because it has more data. It is more reliable data. How to use charts for investing purposes. Okay, now if you're now when I use this, I used how much? I used approximately what, 50 days. If you want to go more higher, go more higher. You can use it for investing also. And here we have used daily candles. You don't use daily candles, you can use monthly candles. It will give you a data which is much longer. Okay, I'll show you one. Let everybody come. Okay, chalo, I'll show it to you since you want to look for investing. So we'll just come here. Now here, this is hourly data. What we will do is we will take this as weekly data. Okay, so if you look over here, now this is moving average on 50 days. You can change this. Say, let's make it 100 days. Okay. So now if you see, your trades are going to be pretty long. Like for example, if you entered over here, you entered in March and you were there in the market till a very good time, till almost December. Okay. After December, again, you can see that you have gone long. Okay. So you can use this for investing purposes also, but they are more, this strategy, specifically this strategy is more implied where you are planning trading and probably looking at a time frame of say a couple of days or probably weeks. That's the maximum. Any other queries? Okay, chalo. I think more or less people are here. We'll start. Okay, moving average, like I said, it will keep giving you again and again signals. Okay, it will give you certain minimal losses also, but the profits that you will make will be huge. Like you can see over here, 165 to 215. This is almost how many? I think what is this? 40 points profit. Okay, and losses, if you see, there are barely like 4 points or 5 points of losses. Okay, so the main strategy in moving average is trade on every fluctuation. Whenever it changes its position, you also change your position. I have personally used the strategy when I started trading. It is very effective. Okay, you only have to be disciplined. You cannot do um, selective strategies. Ask and buy quantity. Yeah, it is important. Quantity in general is important. Volumes are important. Okay, what I would suggest to you as a starter is you go for Nifty 50 shares. Okay, I will show you how to check Nifty 50 shares. The best thing is to go for Nifty 50 shares. There you will never face problem of volumes. Okay, I'll show you that also. Okay, now we'll move to the next topic, which is risk reward ratio. Okay, like I said, even if you're making a couple of losses, you can still make money in the market. In fact, I will go ahead and say that there is no investor in the world who can say that he has never made a single error in his trading, because it is a game of making mistakes. It is a game, or you can say it is a business. Any business like you do, you know, there are risks involved. Stock market also has risk. You have to learn how to manage that risk. Okay, so there's something called as RRR, risk reward ratio. Okay, whenever we trade, we have to take into consideration that there is a certain amount of risk involved, and for that risk I will make a certain amount of reward. Now, what is the ratio of that risk and reward? That is very, very important. Okay. Now, what is your risk? How will you calculate your risk? So your risk is your entry price minus your stop loss. For example, if I'm entering at 100 rupees and I decide that my stop loss is going to be at 98, 2 rupees is my risk. Okay. Whereas reward. So for example, if I'm entering at 100 rupees, your reward is exit minus your entry. So for example, if I'm entering at 100 rupees in the market and I plan, or I have a, you can say a strategy where I feel that the price is going to go to 104. So my reward will be 104 minus 100 rupees, that is 4 rupees. Okay. So for 4 rupees of profit, I am risking 2 rupees. Okay. So my risk is 2 upon reward, which is my 4. So my ratio is what? 1:2. Okay. So this is how you calculate risk reward ratio. Now, what is an ideal risk reward ratio and what is a safe risk reward ratio? The ideal risk reward ratio is 1:1.5. That is, for every 1 rupee you make, every 1 rupee of risk you take, you should be making at least 1.5 rupee. And if you want to be more safer, if for example, you're going for long investments, you can keep an extra safe ratio of 1:2. For intraday and for short trades, or you can say swing trades, you can keep a ratio of 1:1.5. And for long trades, or you can say for investment purposes, you can keep a ratio of 1:2. Okay, now I will show you why it is important to do this. Okay, this table is already there. I will show it to you how you calculate this table. Okay, so now let's presume that you were trading with a capital of 10,000 rupees. Okay, and you did 10 trades. Okay, here I have done 10 trades. Okay, and I have kept a risk reward ratio of 1:1.5. For example, if I make losses, I will make a maximum loss of 1 rupee. And if I'm making losses, if I'm making profit, I should make a profit of at least 1.5 rupee. Now in this 10 trades, 5 times I made a mistake. Okay, and 5 times I did not make mistake. I did a correct trade. If you take the total of your 5 mistakes, it comes to 5,000. And if you take the profit that you made, it comes to 7,500. So what does this tell you? It tells you that in the market, if I keep a risk reward ratio of 1:1.5, and if I do 10 trades, I have to be correct only 50% times. Even if I'm correct 50% times, I will make money. Okay. So even if I make wrong trades, which you will, which I also do, and which every trader does, you have to see to it that you have a good risk reward ratio. If my risk is less and my reward is more, ultimately, I will make money. Okay, I think the chart is a little small. I'll make it a little bigger for you all. Okay, now if you kept a risk reward ratio of 1:2, so here you see I did 6 wrong trades. Okay, but because I made a loss of what, 1%, 1 ratio, so that is only 6,000 rupees, and I made only 4 good trades, I still made money. Okay, I still made money. So even if I was correct 40% of times, out of 10 times I was correct only 4 times, 6 times I was wrong, still I made money. So that is why risk reward ratio is very, very important. Okay, obviously today we are a little short on time. So in our complete the complete course that we do, we will be discussing more on this also. But as starters, you have to be sure that whenever you are taking a risk of a trade, you should be making at least 1.5% of that. Otherwise, it is not worth it. Any doubts on risk reward ratio? Okay. If you all have doubts, even if you all have doubts later, you all can come back to me. Okay. I will always be there to answer. I'm very more than happy to answer. Okay. So you don't need to worry that if the seminar is over, you cannot question me. I'm always there on media or you can mail me, I will reply. Now, like I said, I will give you a starter plan. Okay, what should you do as a starter? How should you start? Okay, so these are some of the things that you should take into consideration. First is your time period. WhatsApp number, who is this? Pradeep. Pradeep, I think you got a WhatsApp from from my team. If you've not got, I will share it with you. Okay, you can put a mail or whatever you have. I'll share my WhatsApp number. Okay, we'll come back here. So first thing, start with swing trading. Don't go for intraday. Don't go for long term. Look at your patterns or look at your whatever strategies you have used, and keep your timeline of a couple of days or a week max. That is the perfect or the ideal way to start. Only start with Nifty 50 shares. I will show to you how to look up Nifty 50 shares in a couple of minutes now. Only start with equity. And this is only for starters. If you have experience, you can go derivatives. But as a starter, I would say start with equity only. Only use recognizable candlestick patterns. I have given you 2-3 recognizable candlestick patterns. There are many more, which if you want, you can join our course and there we can discuss. Next, volume. Like I said, volume is very important. Whenever you trade your share, one of the first things you should check is volume. Okay, now data time frame. Someone was asking what time frame should we use. Okay, use data of the last 6 months to 1 year. And if you're drawing your support and resistance, you can use data of last 1.5 year to 2 years. Next thing, you will always calculate your RRR, risk reward ratio. If the risk reward ratio is not of 1:1.5 or 1:2, don't trade. And last is indicators. Like I showed you, moving average. These are indicators which you can use to confirm your trade. Okay, so now I will show you how to look up Nifty 50 shares. Okay, let's come to NSE.com. I'm sure you must be knowing about this. If you don't know, we'll just go through it. Okay, the website name is nseindia.com. Again, you don't need to go over here. I'm just giving this. This is a free website. Okay. So you come to NSE, you come to market data, equity, SME market. Okay, equity. These are your Nifty 50 shares. Okay, if you see at Nifty 50 shares, if you look at the volumes, you will always see volumes. These are the top 50 companies of NSE right now. So whenever you decide which shares should I look up, these are the shares that you should look up. I'll also show you how to filter this. Now there are 50 shares over here. I would recommend as starters, you should research. So you should look up all these shares and find patterns from these shares. But if you want to filter down, what you can do is you can come here on home. Okay, at home, you will see top gainers and top losers of the particular day. Okay, here. So you can come here, you can see that, okay, these are the companies which are today's top gaining companies and top losing companies. And you can first check these companies. If you find a good trade over here, if you see that Wipro is making a good candle, it is showing you a moving average ka reversal or something like that, then you can go in these companies. This is just to filter down. Okay, so these are some of the things that you should consider. I suppose we've covered more than enough for you to start with. Okay, now anything else anybody wants to know? Any doubts, any queries? OI is open interest. This is again in derivatives. I would suggest if you have not spent at least a couple of years in the market, don't go into derivatives. Futures and options are very, very attractive because they can give you amazing profits. Okay, last week I think I made a option trade in currency. I made 60% profit, but this is after 14 years of experience. So I would not suggest to start with derivatives. Give yourself some time, learn equity. Once you are confident about equity, then you can move ahead with open interest. And if you want, I'll hold a session on that also. Options. Okay, options are basically derivatives. Like I said, these are future contracts. Okay, they are basically derived from some existing contract. I will show you some existing asset. Okay, let's give you an example. Now here you can see SBI. SBI is currently trading at what? At 339. But what if I have you can say a approach about FBI. I think that SBI in future is going to go in this direction. For example, I think that SBI is going to go negative. Okay. So what I can do, I can come to SBI April future. These are futures. These are derivatives. In market, there is no surety. There's someone who's asking if company is doing great and then how to be sure that it will not go down. There is no surety that the company is doing great and it will not go down. Okay. Satyam was the fifth largest IT company in the world, which was trading at 550 rupees. One fine day, its CEO decided to come on the stage and say, "मैंने fraud किया है, मुझे jail में डालो." The share came from 550 to 16 rupees. Okay, there is no surety in market. If you're looking for surety, then this is not for you. Okay, there is a risk in the market. So basically, future contract. This is what I was trying to show you all. Okay, now here if you see there is a quantity limit. There is 3,000 quantity for 341 rupees. Okay, so if you multiply this, 3,000 is the lot. That is, if you want to deal in this contract, you have to buy at least this much, which works out to approximately 10 lakh rupees. Okay, and the margin which will be required is this much. Okay, you need at least this much money to trade in this. So like I said, these are for people who have spent some time in the market. Okay, don't rush into options. Options are attractive, but only after you have a few years of experience behind yourself. And it's a huge topic. I will need a lot of time for that. So if I find that there is a lot of interest in options, I will probably hold a session on options. But I would suggest if you all are starters, don't go for options. Anything else? Anybody else who has any doubts? Okay, so this was a free seminar. There is no obligation on any student to join our any courses, but we do have paid courses also. Okay, we have a 5-day course which is starting tomorrow, which we charge 14,999. But however, because you all are a member of this seminar now, we will charge 9,999. Okay, this fees is valid only for tonight. These are the payment details. Okay, if you register by tonight, this fees will apply. From tomorrow, again, the same fees will apply. Okay, the timings of the course, it will be a 5-day course from Monday to Friday, from tomorrow till Friday, 7 to 9 p.m. Any other queries you can put up to me. There is no obligation for you to join this course. Okay. If you feel like, if you think that you can gain something out of this, you all are more than welcome. Okay. Thank you so much, everybody, for spending your time. I hope all of you all are safe at your place. Stay safe. Any queries, any doubts, anything else you expect from me, your feedback, I am always open to queries. Yes, I will be sharing this PPT and my mail ID also. Tajinder Singh, wherever you got me contacted from, whether it is Instagram or wherever, you can put me a message over there. I will surely share the PPT with you all. What I will do is I'll just put my number up over here. Okay, this is the number. This is the number. Okay, this is the WhatsApp number. You can, everybody who wants to contact us through WhatsApp, this is the number. Okay, you can WhatsApp over here. I'm holding the screen for 2 minutes. You can take down this number. You can take a screenshot of this if you want. Okay, any kind of queries, any kind of doubts, anything else you want to know, you are more than welcome to come to me. Okay, there is no charge for asking queries. Okay. I don't do intraday. Gambler, I only do options. I do currency options. That is my favorite. Okay, I enjoy currency options. In general, I enjoy stock market. It's a passion. Sandy, I'm very pleased that you enjoyed. Okay, take something out of the session. Okay, try and learn more of the market before you enter into the market. Pradeep, you're more than welcome. Pradeep, I do take options also. You can contact me on WhatsApp. We can discuss about that. I only take live sessions. Anil, I only take live sessions. I don't do pre-recorded sessions. I don't believe in pre-recorded lectures. I believe if I can't interact with my students, there is no use of lectures. In fact, I do a lot of one-to-one lectures also. Pradeep, you can contact me for options. I'm always open to discuss. Okay, the same number you can put me WhatsApp. I will discuss with you. There are courses for options also, but like I said, you have to have some knowledge of the market before you go to options. Okay, so you have to be sure that you are aware about patterns and candles and you're aware about technical analysis and everything, and then we can move to options and a little bit of experience of the market. Anybody else? Any doubts, any queries?
Yes, I have one doubt.
Yeah, who is this? Your name, please?
Sandy.
Sandy, yeah, tell me, Sandy.
Yeah, so if I'm planning to, start trading, and if I'm willing to do it with a small capital, like 2,000 or 3,000, 4,000, okay.
Mhm.
So I'll probably go for penny stocks.
Never go for penny stocks. I started with 3,000 rupees. My first company was Satyam. I traded on the Satyam scam. Okay, never start with penny stocks is the worst thing to do. Okay, go for blue chip companies only. Doesn't mean if you have 3,000. I started with 3,000 rupees. So there's nothing wrong in starting with small capital. Okay, but go for blue chip companies only. Start with blue chip companies only. If you just buy 50 lots or if you think that अगर मैं 100 शेयर खरीदूंगा तो ही मैं प्रॉफिट बनाऊंगा, ऐसा कोई लॉजिक नहीं होता मार्केट में. Okay. You can start with 3,000 rupees and do only blue chip companies. There's no problem in that.
Right. Thank you.
Yeah. Anybody else? Anything else you all want to know? Okay. Thank you so much, everybody. I hope you all got something out of this lecture. Okay. Any feedbacks, any queries, anything? The number is right over here. You can WhatsApp me. Okay. And I will always be there to reply. Thank you so much.